everybody. Welcome to the podcast. Thank you very much for joining me. It's been a few weeks since we've done one. It's been a little busy, a little busy with this market going all over the place. As we are recording this, we're about a minute or so away from the close and had another volatile day today. And we're going to go over some of this and kind of put together a game plan, what we should be doing, whether you're trading or whether you're investing. And if you are trading, you're probably maybe getting a little whipsawed. And so we're going to talk about that for just a brief minute, go over some of the big things going on in terms of some of the asset classes and so forth. Just a reminder, eggerscapital.com is the website, and you can also follow us on Twitter. At Karl Eggers is my handle on Twitter. And we have our radio show once a week, and you can find the archives at eggerscapital.com. All right. Well, since we last did the podcast, and again, I haven't even had time to write an article. So, but here we are with the stock market, and you see from the picture, I got the spiders up there because I want to show you a couple things that I'm watching here. And as we're approaching the close here, we're Dow Jones up about 350, 360 points, 2.2%. Emerging markets leading the way, but everything's up anywhere from 2 to 3%, including commodities. And oil, by the way, up about 10% today. So quite a sharp rally in oil. So this was kind of a risk-on day, and it really started this morning with a better-than-expected GDP report. And I really feel like right now, guys, that the part of this sell-off that we've seen here recently, everybody's blaming it on China, where this really started here. I think that part of this, a lot of this, is due to the fact that I feel like the market right now is telling the Federal Reserve they need to raise rates. And that may be a little counterintuitive because we know the stock market typically seems to struggle when rates are going up. But at this point, the U.S. economy does not justify having rates at 0%. And I've been saying for a while, for months, that I didn't think the Fed was going to raise rates this year. And I still don't. But I think they should, and I think the market was throwing a little bit of a temper tantrum because when the Fed minutes came out, that's when some of this started to fall. China was just one piece of it. So, when you see the market falling as fast as it did, part of that I think was not just because of China. I think it was because of the fact that they want the Fed to raise rates. So regardless, we're getting some highly volatile moves. We had a bad day on last Thursday. The market was down 300 and some odd points. Friday, you come back, open down, bounces back a little bit, and then ends down 500 and I think it was 43 points. That was right here. And then, of course, Monday, really Monday can only be described, guys, as a, whether you want to call it a flash crash or a crash crash. Either way, there were stocks down 15, 20% Monday morning. And we had ETFs down anywhere from, I saw ETFs down 29, 30%. Just something's wrong with the system here still. And going back to 2010 when we had the flash crash, nothing has been fixed, it doesn't look like to me. So we had that sell-off. We got almost even, and then, of course, it bleeded the rest of the day. The next day was very explainable. Tuesday, that was the day we were up 600 points and finished down 200, 800-point swing. Or excuse me, I'm sorry, 400's up and ended down 200. We had about a 600-point swing. That, to me, was people selling mutual funds on Monday that needed to get out. Those orders don't go until the end of the night. The next day, mutual fund managers get all these redemption requests. They're going to wait to see how much they can get out of the market before they sell to meet the redemption request to get the people their cash. So a lot of that was selling, I believe, at that point. We also saw a lot of odd lot selling, meaning fractional shares or not round lots. So that showed a lot of retail people being spooked out of the market. We have never seen the spread as big as it was on these days, as big as it was between bearishness amongst retail folks and bullishness amongst institutional folks. That spread is something that you can just feast on. And so Monday morning, as fast as we could, for those people that really wanted to increase their exposure, we went in there as fast as we could and increased some exposure. Whether they were dividend stocks, it didn't really matter what you bought to buy. And it didn't feel so good the next day when it faded, but we have been getting, and this is something important here, we have been getting higher lows 3 days in a row. And I pointed that out on Twitter yesterday, and now we've had a fourth day in a row of higher lows. So even though we've had intraday volatility, we've had this upward biased trend here. And so, look, this thing, if you expect it to look like last October where we had this is a little bit different, I think. This was the end of QE. Okay, remember that? We had this sell-off, about 9.9%, and then it reversed and it went straight back up. And then we started this kind of grind higher, and then it started to roll. And then right when it broke this resistance, or excuse me, support, boom, there it went. Okay, so people are already a little nervous. We've been seeing some deterioration. I've talked about that for a while, that, you know, if you look at during this time here, if you look at the number of stocks that were breaking down, that were already down 20%, all of those things, that was some warning sign. And so you may be saying, well, why weren't you getting ultra defensive during that? The reason was because A, the Fed, the U.S. the economy is still improving. B, I felt that sentiment was as bearish as I'd seen it in a while, even though we were still hanging out here. In other words, usually bearishness, that type we see, comes in at here. We don't see bearishness up here. And investors were very bearish here, and perhaps ultimately they were right, but just for a short amount of time. So, but this is a good test. What did you do during this time? Did you sell down here? Were you selling here, or were you being opportunistic? Most of the people I talked to, and I talked to a lot of people the last few days, were opportunistic. They were taking advantage of some of this, and that's good. But that doesn't mean the move is over just yet. We've had a big recovery, but you can go back to 2011, and you'll see that there are some big days that do this, and we chop around a little bit, even if we're going to go higher. Here's the thing I want you to understand is that people are saying, well, this is an unprecedented move. It's not an unprecedented move. Percentage-wise, we saw the same thing in 2011 that we're seeing now. And so this has happened before, okay? And at that time, that turned out to be a 21% top-to-bottom drop. This hasn't been that far of a drop yet, and I say yet. From top to bottom, this thing fell 14%. Still pretty nasty, okay? Pretty nasty from the recent highs. And just from the other day, when it kind of broke through, that was about a 12% drop. And that's just on the S&P. There's much more damage out there than that. But from the bottom to today's close, just the S&P itself is up 9%. So we're getting some extreme volatility. And so, again, I did a couple of local television interviews on Monday evening, Tuesday morning. And my advice for folks was, if you want to sell, you will get a better opportunity to do so at some point. And this is your point, you know, right in here. If you're wanting to sell, you're in that range right now. This is where you should be selling, because if you wanted to sell here, why not sell here? Well, I'll tell you why you wouldn't. Because what happens is most folks, once they get back here, all of a sudden the panic goes away and they say, well, maybe it'll keep going. And that's where some bad decisions can happen. So here's what I'm doing. Throughout this, I haven't done much. The only thing I've done has been buying, if anything. We've been making some minor moves for our model allocations, but for clients who had a conservative chunk of money sitting there, some of those people have taken some of that conservative money and reallocated to this, and we've been buying some of that. But if your allocation's fine the way you want it, then there wasn't a lot to do. Now, if you're trading this, just be very careful. You might want to use 5-minute charts, hourly charts, something, because if you use a daily chart, it's very difficult here. Okay, technically you could say we tested the low in October. Some people would say maybe we have to go back and test it again. But here's a stat I want you to kind of think of. The data shows that when you get this type of action off of a high, remember we just made a high here recently, somewhere in here, one of these was a high, and you get this type of drop like we saw, generally that is not the sign of a bear market. Okay, that is not typically what happens. Generally what happens is you will go and at least test somewhere around in this area right in here. Okay, and we appear to be headed there, but it's not going to be a straight line. It wouldn't surprise me to see the market down tomorrow. But if we get somewhere in this area and then start to roll over and you get this action, then you may have more to worry about, because a lot of these moving averages are rolling over. So this could be the beginnings of a bear market. Okay, but again, use your systems in place. If you have stuff that is supposed to be out, okay, now that you've gotten the bounce, maybe now's the time to sell some of that. But generally speaking, you don't get this type of action at the at the top of a market. You get this type of action after a bear market, after it's already fallen. That's what's interesting about this. So some very interesting things going on. It's been scary. Like I said, Monday morning was kind of flash crashy, the most I've seen since 2010. But we've definitely had some volatility in 2011 that a lot of people don't remember, but that was our debt was downgraded. I refer to that a lot because that was a very scary time, just as scary as what we're going through now. The difference is now, this deal is we got other players involved, China, et cetera, et cetera. But today was, we had oil. You see this USO up 9.3%. I got a little trend line here. It's not perfect, but could we go on a little rally for a while? Perhaps. When you look at emerging markets, again, all these things kind of look the same. You kind of got these V bottoms. So there's not much to show you in those terms. I would take a look at gold. A lot of people thought gold was going to be the thing, and gold in the last few days is down about 4%. So again, we're not getting huge moves, but this is still a downtrend in gold, and we did get some spikes here, 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 and maybe it's here. So you're getting this up, down, up. We're going to keep doing this deal. And it looks like maybe we will. So I don't really, again, have a great trade on gold. But right now I would just say if you're a long-term investor, go look for some investments. But if you're a trader, we're probably getting closer to the top of that particular run as far as the overall markets when we look at the S&P 500. But that support is in for now. But again, some damage has been done longer term, and so I wouldn't be surprised if some of our signals turn to tell us to reduce exposure now that we've gotten some relief rally. But again, you don't want to do it 10% below when everybody else is panicking, because a lot of this is robots, guys. A lot of this selling is not humans doing this, and that's why you get this snowball effect of going down. And somebody commented to me, we probably just lost another generation of investors, and that's true. What we saw in 2008, a lot of folks that were watching their parents go through stuff said, I'm never going to invest in stocks, and that generation. And then here we are in 2015, a lot of people are probably looking at us going, why would I want to invest my money in something like that? And, the system is still a little broken, in my opinion, because we get this flash crash type of stuff that still happens, and unexplainable type things. I mean, but that's for another day. So if we take a look at the VIX, it was down about 12% today. Huge spike in the VIX. It was over, 53. That's a big move. Anything over 20 recently in recent years has been a big move. It was up 55. So this big move, the change in the VIX was the biggest I'd seen on record, how quick it was. But we're getting kind of back into what would be more of a comfort zone. Our fear, greed indicators coming back into more of a comfort zone. Not quite there yet, but it's getting there. But again, be careful in here because you can get chopped up really badly if you're trying to trade this too much. That's about it, guys. I'll have more on my radio show this week, and just want to give you a quick update that, again, now is the time if you wanted to lighten up on some stocks. Not because I think it's going down, but because we are not on the lows anymore, and this is a more rational time to think about it. Unfortunately, most people are trying changing their opinions. I'm just about to write an article about regret and how that word comes into play. Every time I see these types of markets, people regret not selling 3 weeks ago. And then they immediately turn around and regret they didn't buy something Monday morning. You can't have your cake and eat it too. Okay, that's why you have to have a strategy in place and be calm, be rational. But it is scary. I want to acknowledge that it is a scary thing, and there's still a lot of stuff down quite a bit from its high, and so there's still bargains out there. But perhaps let the market settle back a little bit before you take advantage of some of those. All right. Have a great evening, and don't forget the Eggers Report radio show every Saturday at 9 a.m. live, South Texas area, and it archived on our website at eggerscapital.com. And there are the ways to connect to us on your screen. Have a good evening.